Everybody says important now. Well, one day is Thursday, February 27, 2025, and this is the week and charts. Obviously, I want to thank all you guys and girls for attending today. We're going to stick with the daytime for a little while, see how that works out. I've been negligent in advertising and letting people know where it is, so I'm going to promise to try to get better on that. Feel free to tell your friends. But thanks for attending. I appreciate that. All right, what are we talking about? Well, current market conditions, your questions on trading, your favorite stock and crypto picks. You can go ahead and punch them in at any time, and I'll be happy to pull them up when we get to the live charts. I'm going to take a break from the resolutions. A lot going on lately in the overall market and the methodology in action. So I'm going to focus on that for this presentation, and then we're going to pick back up on the resolutions. I have some really good ones, if I say so myself. There's a disclaimer screen. As you know, you can lose money trading, or as often sum it up, all predictions about the future. But a lot of stuff can happen between now and then. That's from my buddy Greg Morris. There's my contact information. Obviously, feel free to take a screenshot of that. You can also reach me at my email, dave@davelandry.com. My Facebook group is Dave Landry's Trend Traders, but you do have to be at least a gold member of davelandry.com for that. All right, let's talk about the mystery charts and the methodology in action. So here's a mystery chart reveal. This was a mystery chart last week or week before, and you can see nice Landry light, nice accelerated trend. Also fairly persistent move higher. It tends to go up day after day. So it was a really good looking setup. And even in hindsight, now that I know what happened, it's still a good looking setup. Anyway, there's all the parameters down there. It's ALLT. Unfortunately, it failed miserably. Entry was there, stop was there, IPT was there. And I'll circle back to that one in a minute. Here's another mystery chart that's not a mystery chart because it just triggered. This is CCL. It's a short. If you have grandkids, graduation funds you've been saving for years and years, just dump it all into this. That's what I'd recommend. That's actually a joke. Please don't do that or take that out of context. But anyway, there's a parameter, sell short 500 shares per 100K. And the entry is 23.25, stop at 27.25. IPT, which is 4 points above the entry, is 19.25. Okay. And it's 4 points total risk. You can see it rolled over recently after kind of making a marginal new high. Notice it went sideways for a while, tested these peaks a little bit, and all of a sudden broke out. That's kind of like the all clear for everyone. Yay, I'm gonna tell all my friends. And then we know what happens next. It came right back in. Anyway, bow tied to the downside. That's when the moving averages come together and spread out again. As you likely know, 10 simple, 20 exponential, 30 exponential, going from uptrend proper order, meaning that the 10 is greater than 20, 20 is greater than the 30, to downtrend proper order fairly quickly, and that gives the appearance of a bow tie. And down here, you can see this green when they're in uptrend proper order. It was green forever. Great little way to help you stay on the right side of the market. There is lag in it, of course, because it's a moving average, and all indicators, by the way, have lag. I've seen many ads for an indicator that's a leading indicator or whatever. There is no such thing, believe me. If there was, I would have found it by now, or somebody much smarter than me in professional organizations that I'm a member of, at least one of them, would have found it by now too. But anyway, let's take a look at those parameters. Again, you went from green, uptrend proper order, to red, downtrend proper order fairly quickly. Ideally, I like to see it happen where it goes green to red like that, but this is I give it 3 or 4 days at least to flip over. The quicker it flips over, it means the stronger the new possible transition in trend. Keep in mind, you're trading a trend transition, especially on the short side. Obviously, you want it to be coming off of as high of highs as possible. Same thing goes for the long side. You want it ideally all-time lows, and then for shorts especially, you want it ideally all-time highs. And the reason is the most amount of people are going to be trapped on the wrong side of the market. Everything I do has a psychological backing when it comes to looking at the charts. There's some people out there doing some things that seem a little arcane to me. Maybe there's some reasoning behind it. But what I've seen so far is nobody can explain to me why it works. And so it's kind of one of those things that gets tossed out. I'd made some mistakes, actually happy mistakes, I guess. So what's the guy's name? The painter, can't think of his name. Bob Ross used to say happy little mistakes. And years ago, I was doing some consulting and programming with Connors and helping design and program trading systems. And every now and then I make a mistake or something. And I showed him one thing that actually kind of worked, but we couldn't wrap our head around why it worked. It just did. And he said, well, we need to toss it out because it's not conceptually correct. So everything I do is conceptually correct. Anyway, in this particular case, you've got a lot of people, you've got all this overhead supply. Anybody who bought from, let's say, 24 higher, where is it now? 23.98 is losing money. And if this thing begins to crack in earnest, those people are going to be forced out, or they're going to have to think long and hard about holding it through that spill. The entry is here. You need to see it triggered early. Stop is up here, because if it goes on to new highs or near new highs, we know we're wrong. And then the IPT is down here. So I'll follow up on this one, obviously, and upcoming shows. Here's a mystery chart for today. And there's the parameters there. And you can see that we've pulled back to the moving average. And this is a Landry-like pullback. Down below, another one of these indicators, right? Not a huge fan of indicators, but it does help to illustrate, as I call them often, illustrators. Helps to illustrate what's actually happening in the chart. Well, you don't have to be a rocket scientist to see that this is a nice longer-term trend that had begun to accelerate higher. Nice little pullback to the moving average. That's what I call a Landry-like pullback. Entries here, stop is here, and the IPT is up here. And again, I'll follow up on this one in upcoming webinars. One more stock. Now this one is commodity based. I'll give you a little hint there. So I'm a little bit more lenient when it comes to patterns. Like the last one, it was very persistent and nice acceleration, all those other things. And longer term, it traded cleanly, whereas this one can be a little choppy at times. But I think it was worth a shot, and it hasn't triggered yet. If it goes a while longer without triggering, I'll go ahead and take it out. But again, a Landry-like pullback once again. That's one of the things that's kind of shocking. I redid a webinar yesterday for Metastock. Metastock said, "Hey, you want to redo this?" He's like, "What webinar do you want to do?" And usually I think about these things and try to come up with something gee whiz. And before I could answer, he says, "You want to do the same one you did last time?" I'm like, you know what? That was pretty good, in my humble opinion, which I'm told you don't have to say because it's redundant. But I thought it was pretty good. And the reason I thought it was pretty good is it was on the only pattern that you ever need. And spoiler alert, that's the Landry-like pullback. And the thing about a Landry-like pullback is when I start looking at them, it's like a lot of my TKOs or also Landry-like pullback. This is a bit of a TKO right here into that 30 EMA. So TKOs and 30 EMAs, which is a kind of a cool pattern. I know I'm kind of a nerd. You want a part of them, right? That is also a Landry-like pullback. So a lot of the patterns do also kind of dovetail, I guess is a word, or coincide might be a better word, with the Landry-like pullback. And it's such a simple pattern. I think it's just an awesome little pattern. As you can see, Landry-like down below just counts the number of bars. The lows are greater than the moving average. Does not measure magnitude. So let me back this arrow out. So notice that it continues to rise even though the stock falls. So this is not predicting direction other than telling you that it's in a longer term trend. Same thing back here for the downtrend. So we know it's in a downtrend here, quite a few bars of Landry-like. Then it flips over to the upside, and then you have to be thinking back here like, okay, are we making a transition from downtrend to uptrend? And you know, maybe that could be a pattern in and of itself. If you flip from uptrend to downtrend fairly quickly, that could be like an early warning signal maybe. Anyway, so Landry-like goes to 0. Remember, when the bar intersects the moving average, there is no Landry-like. There's no light in between the stock bar, okay, and the moving average. And you can see we actually did have 1 or 2 days of downside Landry-like in here. That's okay because we're waiting for an entry One of my general rules, and I'll flesh this out a little bit more when we get to crypto, because in crypto, it does really make a lot of sense, or a lot of examples are there in crypto because the market is so volatile. But as a general rule, you don't want to buy any stock that is below the 30 EMA. Now, this is below 30 EMA, but our triggers will be well above that 30 EMA. And the parameters are entries there, stop is down there, and the IPT is off the charts, so to speak. Now, last week I mentioned an OGRe in the webinar. I thought it'd be good to just go ahead and follow up on that. And this is kind of, I hate to use the word S and Gs, but I just took a small position here, only 100 shares. And the buy was here. The initial profit target was 65.35, I think 2.5 points, or 65.55, whatever it was. And the IPT, the trailing, oh, I got stopped out on a trailing stop on that one. Now, opening gap reversals, you want to find a stock that's really, really strong. And I don't remember if I have the slide in here again this week, but you want to find a stock that's really, really strong. You want to see that big knockout gap on the open, and then you look to play that reversal back the direction of the trend. Back in the days when there were market makers on the floor, it was my understanding that they would open the stock as low as they could when everybody was dumping it on them to a point where, I hate to use the word value, but it was below value, so to speak. And the market maker knew that he could bring the stock back up during the day and then flip it out for more money than he had to buy it back in. He's forced to buy it back in. So it's like, all right, you want me to buy your crap? You don't want this anymore? Fine. I'm going to give you next to nothing for it, and knowing that I can turn around and make money. He's got to eat too. So you're sort of playing on the side of the market maker when that happens, except you don't have to buy it. But anyway, I got knocked out on a trailing stop on the remainder on this one. So I made, I think it was 1.5 and $2 on the first loaf. And let me see if I can make this math work down here. Yeah, $2 on the first loaf. Okay, so $2 was with IPT. So you can see 100 shares went on at 63.35, and then 50 shares went off at 65.35. Okay, so that's 2-point profit, and then stopped out a remainder trailing stop 64.78. Unfortunately, later in the day, it did resume its rally, and that would have been a pretty decent trade. And that's the ultimate goal on all trades, is to catch that trend on that second low. So in this particular case, 67, that'd have been 3 or 4 points, or at least 3 points on the trade, or 4 points, whatever the math comes to on that, almost 4 points. So that would have been pretty nice, but this turned out to better than the poke in the eye type of trade. Now, I talked about a Buy At B last week, and John's not here, but John's our resident IPO expert. I think he might have been the first one to mention this in the Facebook group. He talks a lot about IPO, so I'll go ahead and assume it was him. And what I love about that is he's often on to some of these IPOs, and sometimes I might overlook them. So it's hard to say whether or not I would have seen them or not. There's a lot going on around here, and I get really busy at times. And so I thank him for that. But anyway, this was the new closing high on this day here. And the way the setup works is you're going to buy on the close any on the close, new closing high on any day on day 5 or beyond. So let me just rewind that for a second. So you buy the close on day 5 or beyond, okay? Now, if it comes public on Monday and Friday, it makes a new closing high, then you would actually buy on Friday. There's a few caveats, obviously. I have the $20 rule, which I now have made several years back into the $30 rule. So ideally, you want them to be below $30. This was kind of right at $30, right on the cusp. And also, you want to make sure you have fairly decent range. In this case, you had decent range. You don't want to buy something that's really, really narrow range, at least in the Pioneer setup. What you might want to do in a case where you have a narrow range is just see if it pans out, see if it begins to trade more meaningfully, and then trade the first pullback. It's not the end of the world if you trade the first pullback in an IPO. Ideally, your biggest money is to be made by getting in on these pioneer setups, but that might be a case where you don't get in on the pioneer setup for a couple of reasons. One, the range isn't there, or two, one thing, and I don't want to confuse the issue with facts, but one thing as I preach, I like to do is ask myself, what's the story, fad or glory? Or are they going to cure cancer? Or do they have some wonderful technology that they're using? Or is it just kind of like ho-hum, like a bank or a brick and mortar retailer? And the example I often used was Academy set up as an initial type of pioneer setup, like a Buy At B or whatever. And I decided to pass, but I'm like, brick and mortar retailer, who's going to buy anything from brick and mortar retailer? You've got Amazon, and I kind of passed on that, or did pass on the pioneer setup. But a few weeks later, it set up as a pullback, and it was a damn good looking pullback. And the technician in me, it just forced me. He's like, I got to close my eyes and buy it. And we did in the service, and it turned out to be one of our bigger winners. And not to confuse the issue with facts, but what happened was the pandemic was in full force, and a lot of people got sick of sitting around the house, and they went out and bought bikes and kayaks. And I guess those things are a little tougher to buy on Amazon. Although I did buy 2 adult trikes online a while back. And that's another story altogether. Why am I buying adult trikes? If you visit, we'll take a ride around on them, and you'll understand why. Anyway, so 600 shares in this particular case. And what I did was, sometimes you see a bit of an expansion in range on that day 5, and you can get in a little bit earlier. But in this particular case, it actually went against me a little bit because it closed actually below where I got in by a little. Day 5 expansion, that's something we talked about in the group. I think there's definitely something there. So I'm sort of violating that on close of day 5 rule at a minimum. And I'm looking, if it looks like it's going to trigger, and it looks like it's going to trigger an expansion of range, I might get in an hour earlier or so on a setup like this. So just an FYI. But technically, you should only buy it if it closes at a new closing high on the close, right before the close, obviously. Anyway, so I sold half of it on that opening gap, and then I was out of the rest here. And the original trade made $640 on 600 shares. And then the second trade actually lost money, okay? So technically, I should have gotten out on the second trade. So 640 minus 220 is 420. So overall, I made money, better than a poke in the eye. If you annualize this, the numbers would be ridiculous. So kind of proud of that. I'm not proud of the fact that I let it turn into a loser. So confession time. A couple things I did wrong on the second account. I forgot to take the initial profit target. Luckily, it rallied back up. Let's see when that happened. Yeah, so I'm like, holy crap, I totally forgot. And then a couple days later, we're back to back in black on that one. And I did let it, while we're talking confessions, looks like I did let it dip a little bit. Obviously, on the day I sold out, technically, I probably should have stopped out on that day too. So I'm kind of seeing the error in my ways in here. So do as I say, not as I do. So technically, unless you're really seeing an expansion of range like I thought I was, and maybe I was looking at it too small of a time frame, you want to wait to the close on day 5 at least, make sure it's a new closing high. And then once you take half of your partial profits, you want to make sure your stop is at break even. And I'm just seeing this live. I must have not had a stop in place or was paying attention, but you can see it did stop out, should have stopped out on that particular day. But anyway, so back to the confessions again. In the second account, I totally forgot to take initial profit targets, kind of a rookie mistake. And this kind of circles back to the million little things and why I did the million little things series is because it's almost like a big confession or an ongoing confession. I'm looking forward to getting back to that series because it's like I find myself okay, if you only would have written this down, or if you only would have paid attention, or if you only would have waited an extra 30 seconds after you walked into the office, because I walk into the office and everything looks great. We talked about that before. I go have lunch. All of a sudden it went from low sugar to full of sugar, feeling good, right? and everything looks a lot better. So it just amazes me how it's a million little things, and I hope to keep it that series for a long time. So obviously I let a winning position turn into a loser. It looks like I let that happen twice. In this particular case, I just saw that as I'm teaching. That's the beauty of teaching, by the way. As you probably know, you get better at something if you're forced to teach it to somebody, right? Although I'm not being forced, I'm enjoying this, obviously. But while I was working this presentation, I wasn't really paying attention. I should have had a stop in place, and I didn't. And I looked over and I saw I was negative. I'm like, holy crap, I need to get out of this because I don't want to look like a complete idiot, and I want to make sure I have a presentation to show you. So that kind of, there's a few things there as I'm thinking out loud. That kind of, it's part of the accountability. I'm holding myself accountable to you. That's one of the million little things, and it's also one of the resolutions. Those two things kind of dovetail. In fact, spoiler alert, next week I'm going to tell you what are your resolutions needs to be to go in and watch the million little things watch list, and I'll put a link in post. But if I say so myself, that's a really, 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 really good series. Nick, I see your question. I'll get to it in 1 second. This was an OGRe in AU, which is a gold stock, and the buy was here, and my initial profit target was at 31.10, and it was almost about to hit it near the close. And what I did was I went ahead and pulled that initial profit target off, and then I just exited market on close, or near the close, I should say, on the full position. So didn't set the, not a huge position or whatever, but sometimes in these OGRes you can pick up a few $100. And if you want to be aggressive with them, you could take small positions across multiple accounts. And it was 1 point, better than the poke in the eye. 200 shares, 1 point, $200. I mean, annualize that, it's an extra 50 grand a year, so it's better than nothing. Obviously, you can't always do that consistently. And it amazes me, here I go. Warning, these gurus, and maybe I'm just pissed off because I just had a couple losing trades, but these gurus, one guy's like, you make an average of $823 a night overnight. I'm going, yeah, you're making money overnight with your little system or whatever, but what you fail to realize is every now and then you're going to get whacked. And these very short-term systems or whatever methodologies just don't really work because shit happens, right? Anyway, so nothing is, so what I'm trying to say is I'm not trying to imply that you can consistently make that money, but every now and then the stars kind of align, everything sets up, and these OGRes, and it helps when it's a big, thick stock. So you know that a lot of people got knocked out. You probably know that there's a lot of institutional support for the stock. And I don't try to quantify these things. I don't look up any stats or anything. But as a general statement, you know that there's a lot of people that probably want to own it if it's a popular stock, especially if it's really been trending and they feel like there's FOMO. So you want to make sure that some sort of buyers that could possibly come in while it's at a bargain. And by the way, I mentioned something to the group the other day, the Facebook group. I forgotten about like the OGRes +1. So sometimes you get an OGRe, it doesn't work out or whatever. You might actually lose money on the trade, but sometimes the next day it'll take off. So pay attention to those OGRes +1. OGRes open a gap reversal. One of you guys name that for me. I forget who. So, but if you're here, remind me so I can thank you for that. So again, it didn't get to the IPT till near the close. So I decided, not throwing caution to the wind, was like, okay, we only have a few minutes left. We're pretty close to the IPT. Let me pull that IPT order. And then I'm going to go ahead and get a market order queued up on all of my shares. And I'm going to exit near the close. And because it began to take off so late in the day, my hope, and I know you should never hope in markets, but my thinking was possibly that it could be making a run late in the day, possibly short covering or whatever, and I might squeeze an extra point or so out of this. Who knows, right? So I went ahead and pulled that order. As a general statement, though, I would leave the order in place and not pull it in and hope, unless it's near the close and you're jockeying to get out of the position where you got to cancel some orders and then put on your new orders twice the size. Anyway, I did have a trailing stop. I think I had a 1 point trailing stop on that during the day. And automated, I'm using automated trailing stop. So Nick says, have you ever experimented with pyramiding into a position? I've experimented with everything. um, yeah, that's something else I've been writing about lately is you don't have enough time or money to try everything. And this is why I'm harping on something like simple, like Landry light pullbacks on things of that nature, TKOs and simple patterns, bow ties, etc., is because you won't have enough time or enough money to try everything in the world. You'll run out of money first. Okay. That's what happens to most people. They grail hunt, and they not only grail hunt, they try a lot of things. And as I said before, many years ago, I was talking to someone. This has happened more than once, but one particular case sticks out. And some guy was telling me he was using this method from this guy and blah blah blah. And he showed me the trade he just took, and he made a little money on that. I'm like, well, that's really neat. How long have you been doing that? Because I'm an old dog, willing to learn some new tricks. He goes, I just read about it this morning. I'm like, oh God. So that's probably the worst thing that could have happened to this gentleman, is that he was instantly successful in something that he just read about, as opposed to doing a due diligence. And that's one thing that I preach all the time. If I show you opening gap reversals, or especially something that's more about core methodology like Landry light pullbacks, go in and find 100 examples. Find some that worked, find some that didn't. Go into my archives, davelandry.com/archives. That'll save you a lot of time in the hunting process. And look at my archives of the core trades that I recommended, and see how many of those failed, and see if there's characteristics in the ones that worked versus the ones that didn't. All right, just getting back to this OGRe real quick. Oh, Nick, I'll get back to you. Okay, so Nick's the question is, have you experimented with pyramiding into a position? Sorry about that, my ADD kicked in. Yeah, I've experimented with everything. The problem is when you're short to intermediate term trading like this, like I do, and you're following a specific money management plan, the plan calls for entering the entire position at once. And occasionally, not often, but occasionally, you'll get a big overnight gap or a big expansion of range really quickly. And that's obviously the ideal. And if you're not entering the entire position, you're going to miss that. The other thing about scaling in, or pyramiding, as he says, is that you're faced with a lot of decisions. Okay, so say you're going to get in at I don't know, 31. Okay, and you buy some at 31 because it hit 31. Now tomorrow it's at 30.50. Do you buy more, or do you sit on your hands to see if it comes back in? Okay. Tomorrow, let's say it's up a point. Do you buy more up a point or not? Now, Livermore said that he would buy a position. He'd buy like a small position, and then he would pyramid on top of that if he had a full line of whatever he wanted to buy, 100,000 shares or whatever. Maybe it's because he's moving so much size or whatever. And I don't know. But the thing is, you have to. He would add to that, only add to the position if it was higher than his last buy point. So the point I'm trying to get to there is, if you did some sort of pyramiding, I would do an actual pyramid. So pyramiding has a connotation of you're piling in more and more and more shares. You want to do just the opposite. You want the base to be, let's say you're going to buy 2,000 shares, or maybe your base is 1,000, and then you buy, let's say, 500 shares on the next one, and then 400, and then 100, or whatever the numbers are, to make that math add up. So you want it to look like an actual pyramid, as opposed to pyramiding in terms of adding on leverage and adding on more and more shares. But with a methodology that depends upon a short-term move, ideally, you got to be really careful in scaling in. So I would recommend against it, and I would encourage you to do two things. Number one, work on your stock picking to where you feel like it's, you're really looking at these F-yeah kind of trades. Okay. Now look at my archives and say, geez, Dave, I don't know where you were on that one. That doesn't look like an F-yeah to me. That's good though. That's great. If you start feeling that type of thing, I don't mind if you criticize some of the trades that I'm looking at, because maybe you can learn something from them. Okay. And that's my whole goal here, obviously, is to teach how to trade. But I would recommend you not long story endless. I'd recommend you not pyramid into positions. And again, yeah, I've tried everything. Now, getting back to the best OGRes, you can see he was at a very, very, very strong trend. And for a gold stock, this is pretty impressive trend. The persistency is through the roof on this thing. It just seems to go up for the most part day after day after day. So ideally, you want a thick, well-known stock, and ideally, the sector in this case was gold. The underlying commodity was also doing well. And the S&P at the moment was at all-time high, so that helped. That's before we had this last sell-off. So you should do that. Make sure these things are in place with the OGRe. The OGRe is a slightly different than the normal trend trades. Not that I won't trade thick stocks, but the OGRe, you definitely want a more of a well-known stock as opposed to a generic stock or a stock nobody's heard of. The core trades, for the most part, not all the time, because things are shifting, right? Drugs right now is doing well, biotech not so much. So we might be buying big fat drug companies as opposed to highly speculative biotechs really soon. And you know, it's funny when somebody looks at the service for a short period of time, they're kind of like the man grabbing on an elephant, right? The blind man on an elephant. They're like, well, Dave, all you do is you trade these big, thick stocks. It's like, well, Dave, all you do is trade these low price, crazy, volatile stocks. It's like, no, I'm willing to go where the money is, okay? And if we were forced to trade some of these lower HV stocks, then so be it. And that's one of the things that we'll get to Landry 100 in a second. I'll just kind of touch upon a few things there. But one of the things with the Landry 100 that's coming out is I'm having to go further and further and further down the HV list of the new closing high stocks to find members of the Landry 100. I'm having to go down until I'm getting to like the Abbott drugs and things like that, stocks that I normally wouldn't trade personally, but I'm being forced to because that's the only place that I'm finding the momentum a little further down the line. All right, and now for something a guru's never showed you. This was a TKO / Landry Light pullback that I discussed yesterday in the MetaStock webinar. Notice the Landry Light was doing really well. It was accelerating higher. It pulls back to the moving average. Landry Light goes to 0. That was a good looking setup, okay? If I saw the same setup tomorrow, I would take it, especially because it's an energy stock, and that's really clean for an energy stock. And one thing I was noticing, I didn't mention yesterday, but if you look at the prior Landry Light pullbacks, they're, for the most part, looking kind of interesting in here. You have one here and one sort of back here, and then this last one didn't work. How does Greg say that the new highs are fantastic until the last one? You know, or something like that. I'll have to clarify, but I think that's what his point is, that eventually the trend does end, right? But there was the entry, the stop was down below, the IPT was well above, and unfortunately, it failed miserably. It was kind of off to the races at first, and we lost a little bit less than we had moved the stop higher within the first few days of the trade, or first day of the trade maybe, and then, but not much, obviously, because your max loss would be $2,000 total. And we lost 922 versus 1,000, so that'd be whatever that math comes to, 88 times 2, so a little bit less, $160 less. And there was also a bit of a dividend in there too. Most of the stocks I trade don't have dividends, but this one just happened to have one. So that helped to mitigate the losses a little bit, but it's a loss nonetheless. And now I'm going to show you something else a guru has never showed you. And this is that mystery chart from earlier that failed miserably. It triggered, kind of barely triggered, and then came right back in, unfortunately. Now, I did, by the way, apply a little discretion yesterday because it kind of barely went past the stop. And today I did have to get out of the remaining shares. Okay, this is a crypto. We'll get to crypto in just one second. Live crypto, that is. But this was a trade that I mentioned in the Facebook group. And this is one I played a while back on this little breakout back here. And then this is more of a generic type of pullback in crypto. With the crypto, I'm a little bit more lenient because these things are so wild and crazy. And when they go, they go. I might not trade a stock that that would have such a wide range bar as part of its breakout. But since this was a new pair, I've kind of the first deeper trace or the first pullback, everyone look at that. I thought it was worth a shot. And I'm still applying my shitcoin to Bitcoin strategy. And you can see in this particular case, in for $1,000, I sold half at a $100 gain on half. And then I ended up buying, this might be the previous trade. Now I'm looking at this. Oh, this was the last. Okay, that's the last little buy I did right there. Okay. So just taking some crumbs when you hit these IPTs and such and putting in the Bitcoin. This might be from the last IP trade that I did. It was $50 going in. So I kind of treat it like a commission, so to speak, where if I could make a little money in these shit coins, then I could turn it into something that's slightly more tangible, although some might argue against Bitcoin. But I'm kind of a longer term bull on Bitcoin. I got to throttle down on my Michael Saylor watching here and there, because it is confusing the issue with facts as a trend follower who believes in stops and does not believe in buy and hold. But what I'm doing here is just kind of S&G type of stuff, a little here and there. If I could make money trading and then put a tiny bit off, kind of like a commission, so to speak. I call it mining, and I use those air quotes because a miner, as I often say, for an individual to run a mining farm, I think it would be virtually impossible unless you live someplace where electricity was pretty much free. Anyway, the entry was here. The initial profit target on these things, I just use a across the board 20% for now. Eventually, I probably should adjust to the volatility like I'm doing with the core methodology, but 20% seems to be a good round number. And then again, I mine to Bitcoin. So instead of using a Bitcoin miner, what I'm doing is using these shit coins, which most of these are total BS, right? But they do move, and you can make a little money off of them in the meantime. And I think it's a great way to kind of pull a little tiny bit off. I kind of see it as a commission, because commission on these things aren't too bad. They're not exactly cheap, I would say. But I kind of remember back in the day where commissions were like $50 or more on a trade. And so you really had to do well in your trade if you're paying $50. But anyway, so I mined off a little bit to Bitcoin, and we'll see how this works out. Longer term, as I said ad nauseum, if it does begin to turn into real money, then obviously I'll need to put some money management into the system. Okay, TFM 10% system. I'm going to go through this really quickly, I promise, this week. So the zones are based on the percent away from the 50-week closing high, and they were inspired by Jeff, who's here today. Thank you, Jeff. And Jeff likes to think about leaving a market or exiting a market when it's 5% or more away from the 50-week closing high. So right here would be of some concern to Jeff because it dipped more than 5% away. And the 10% is the line that's for an index like the S&P 500 or even the NASDAQ. That's a good line in the sand or whatever. Like, okay, if this market drops 10%, I need to think about getting out of the way, because if it's going to drop 50%, it's going to drop 10% first. And that's just TA 101, and that's to avoid the diaper change rule. So there's the sell signal, and that was the last sell signal we had the P's, and it's been long ever since. You had 2 bars of upside Landry light, so you would buy on that Friday close there, and so far so good. It's had a pretty good run. And notice that we're still in the green zone for now, at least. Okay, the market is starting to look iffy, especially on a daily, which we'll take a look at in just 1 second. But now your sell, again, would be down below the 10% level and also below the moving average. So the moving average is now above the 10% level. So the 10% level, it's the greater of, it'd probably be the best way of putting that, or below both, however you want to look at it. But the greater of would be 5,500, okay? And that's 10% again off the top of this green line. Here's the Q trade. Like I said, I did a quick back test and I liked the results. So I went ahead and bought 100 shares, kind of an S&G type of trade, just to see what would happen. And I'm kind of shocked. It ran 60-something percent. It was 65% last week. So there was a 1380 difference. And as I've showed before, these swings could be, even on 100 shares, it's like $8,000 swings. have happened to me so far. And if stopped out, that would be a pretty big swing. Was at 538, it's 18, and that's like $6,000 of loss compared to where it was. But hopefully, I use the word hope, hopefully this bull market will keep going, longer term bull market that is, and we'll be talking about this when it's up 100% or more. All right, real quick, Landry 100 proof of concept, couple of proof of concept things happen again this week. So we talked about these last week, and so I'll just kind of buzz through them until I get to the ones I want to focus on. But momentum can often beget momentum. FOMO kicks in when the market's at new highs. Momentum can end badly, and even when you win big, and I'll show you that in just one second. The real money's in the longer term trends, okay? It does put you in the hunt on the next big thing. Now, it's not very exciting, but right now there's a lot of areas kind of rolling over, a lot of highly speculative areas, and some of these more stodgy areas like major drugs are bottoming out. So now I'm starting to see major drugs flowing into the list. Not that that's the next big thing, but that might be something that we can make a little money on while this market finds its way. So again, as I alluded to earlier, the lower HV stocks are starting to show up in this. It reiterates the fact that breakout trading has a low accuracy rate, at least initially. So if you go through this list and you look at when we got in, now this is hypothetical, although I did some experimenting with it, and that's one reason why I'm telling you, you don't have enough money to try everything. So far, it's sort of failed miserably, although I do have a few big winners that have made 100% or more. But I wouldn't recommend you rush out and do this unless you're going to do it in a big way for a long time. Like anything, it takes time. But breakout trading does have a low accuracy rate, and that's why I'm putting in 100 stocks, or I've put 100 stocks in this portfolio, because I know some will fail miserably, but some will work out. And we're looking for the occasional outlier, and that's what makes it all worthwhile. And I'll explain that in just one second. But again, if you notice on a lot of these, they'll trigger and then they'll retrace because it was like a false breakout, and then they'll take off again. Now, the outliers, again, make it all worthwhile, but you will need a few stocks to make sure you're catching some outliers. So this was bought on November 20th, and it's had a pretty good run since, okay? And that's 190% from this. This arrow is wrong. This arrow should go right here. But that's been a pretty good run. It was much higher than that. Now, again, the outliers are key, and that goes for my core methodology too. This sort of backs up momentum trading, and that's what's kind of been fun about this is it's a proof of concept type of thing again. And so I just took out this APP yesterday. Now that was up over 400%, okay? And momentum ends badly. Again, proof of concept, right? Things that I'll take things to learn about momentum, right? It ends badly. Outliers are key, etc. So hundreds and hundreds of trades, and just taking out this one trade here from these hundreds of trades would have resulted in a closed portfolio loss, at least, as you can see, of over $6,000, as opposed to being up $17,000 to close portfolio. And you could also see like this RKLB, 135%. Okay, that's $13,000 on this portfolio, which is $1 million portfolio. And here's another one right here, $4,000. So that makes a big difference too. So these occasional outliers are key. The accuracy in the closed portfolio is very, very low because remember, I'm kicking out losers first. So the winners are going to stay in for the most part until they begin to fail, like the APP did. And then the losers are going to be added to this closed trade list. Anyway, so I just thought that'd be kind of cool to show you. I don't know, part of me. Any questions on anything thus far? Let me shift gears and we'll get into crypto. Oh, look, this thing's getting whacked, so I might have to get out of this one. You can see this is an IP. I do have an order in at 100%. I think I missed 100% last time on this, so that's another shame type of trade. I just didn't think it would go 100%. But I do try to take out some more money at 100%. Sometimes these things will spike up 100% and come right back in. Again, I don't have any money management at Landry 100, but that APP was up like 400%. It stopped out at 200 something percent. So that's a lot to give up. I mean, it happens. It's all trend trades in badly. I think if you were doing real money, it'd be hard not to take some profits when it was up that big. I think if you're up 100%, that's one thing I've been experimenting a little bit with. And again, I'm realizing that neither I or you have enough money to try everything. Okay. But I am taking partial profits at 100, or taking off half at least at 100%. But I think in these shitcoins, I think it's a good idea to put in just a crazy limit order, just way out there, and you never know. Sometimes it might get hit. So that's that trade. I'll probably have to, this is the IPT, so if it comes back below this too much, I'll probably bail out. And obviously, I don't want to hold past the entry. I don't want it to turn a losing trade. But I would like to make something on the trade overall. And on the second low too, of course. Bitcoin, it's becoming a bit of a bummer. Right now, you have a tremendous amount of overhead supply, okay? So anybody who bought in this range is now losing money now that it's beginning to break down. Now, one guy ran up to me in the gym yesterday, and he has an ultimate goal. I forget what it was, something fairly sizable, like 10 or 30. I forget his number, Bitcoins he wants to own at some point in time. And he's loving his sell-off, and he's lapping them up. I wonder if he's a microcosm of what's out there. I don't know. I do see a lot of bad behavior that reinforces technical analysis from being a man on the street sometimes. And one of them would be, of course, would people buy a stock and it begins to fall? They ask me what they should do. I'm like, let's fall, and you might want to get out. And then sometimes the same stock will be rising, and they're thinking about getting out. And I'm like, well, why don't you just hang on because it's going up? And it's like, no, I'm gonna get out at break even. It's like, well, that's human nature again. So break even would be somewhere in this range. So Bitcoin is just looking kind of ugly at the moment. I wouldn't be excited to rush out and buy it at any particular time, for now at least. But notice the Landry light beginning to build. That's highs or less than the moving average. And as I said earlier, never buy any market, crypto included, while it's trading below its 30 simple moving average. So if I reset this price scale, you could see you wouldn't want to buy it here because you're below the average. And look what happened. It dropped from 67 down to 52. What's that, a 20 or 30% drop? And when you get to these shit coins, it's really exacerbated in these moves that they make. But Ethereum, I guess, would be a good example. I mean, look at Ethereum up here. You're still below the moving average at 3,000, okay? And then right here, you're still below the moving average at 2,000 and change, okay? So Ethereum looking ugly. I haven't looked at Ethereum to Bitcoin lately, but you can see, yep, 30 EMA. Look at that. That's your best friend again. I mean, if you don't walk away with anything from this webinar, look, don't buy a market. Look how ugly that is if it's below the 30 EMA. And then on top of that, one thing I was thinking is going live, you might want to wait for some confirmation other than a bar or two above it before thinking about getting long, okay? Now, as I've said quite a bit, sometimes you can just come in and buy the stronger pairs. This one's up 45%, but it's below the 30. This one's up 38%, below the 30. This one's kind of spiked higher. It's not really catching my eye. Ideally, I want to see these markets making some brand new highs before getting too excited about buying them just because they're going up. And again, look at all these big winners, or most of these big winners, and they're all below the 30. This is kind of wide and loose. Yeah, it's up 15%, but it's not like it's 15% in brand new highs. That was below the 30. That's below the 30. This is okay. It's kind of bottoming out a little bit. I wouldn't take the trade, but you can see it's kind of bottoming out a little bit. Again, below 30, nothing to do there, nothing to do there, nothing to do there. So you kind of get the idea. This one, B and C, is waking up a little bit. I wouldn't rush in and bottom fish just because it's rallying off the bottom. And again, look at all these below the 30. So right now, there's really not a lot to do in crypto. I did buy this one, I think, yesterday, but I stopped out, or recently, because it was up big and it was making these multi-month highs. But ideally, you want even greater highs. And again, look at all these below the 30. These are the strong ones. Wait till we get to the weaker ones. And again, it's just amazing. Look at that, okay? I feel like Tiny O's. This one lost 75% of its value after it closed below the 30, and it's still going, okay? It could go to zero, right? Look, there's another one, okay? I know I'm a nerd, but look at that. That's half the value right there, just by doing something like not buying a market that's below its 30 EMA. This kind of catching my eye in here, but it would have to actually make new highs for me to probably go after that one. And again, tons of crappy stocks in here, no pun intended, crappy crypto, because they're shitcoins. All right, anybody want me to look at anything? I doubt there's anything worthwhile in crypto. I'd be shocked if there was. Other than IP, you might want to put all your money into that for now. Just park your idle cash in that. Making a joke. Okay, I'm going to shift to stocks real quick. Let's take a look at stocks. And let's get this out the way. There's that CCL again. Boy, does that look like it's in trouble, huh? Talking my position a little, huh? All right, S&P 500. Kind of fun to do these shows while the market's open. I know you want to party with me. We had a nice little opening lap this morning, but unfortunately came back in. As I preach ad nauseum, when you're at or near new highs, a big up day looks fantastic, but a big down day looks ugly. We've had a few big down days, obviously, and we're down kind of toward the bottom of this range, and lots and lots of trading in here. So if we break below the range and don't go right back above it, then that overhead supply becomes really important. I guess I need to learn how to, what are they not saying? Important. Everybody says important now. Important. I guess they leave the ends out. I don't know why people, anybody know? And then literally, like they're from England, even when they're not. But you can see both sides are coming together. We now have a little Landry light, or 1 day of Landry light below that 50 simple. So P's are looking questionable shorter term. Again, longer term, take a look at weekly. Not too bad, huh? Just kind of pull back a little, consolidating, ready to make a new leg higher. Looking at the forest for the trees, but looking at the trees, trees are starting to lose their leaves. Looking kind of ugly. I don't know if that makes sense. NASDAQ composite. Look at this. This is looking a little worse than the P, especially given today's action. Again, you know, a big down day when it's down towards lows makes it look really ugly. Let's see. We don't officially have a bow tie just yet. This 10 would have to cross below this 30 and 20, but it's getting there. We almost have bow tie to the downside. And I think, yeah, that's off of, for the most part, I think that's off of all-time highs. Again, you want a bow tie of all-time highs in individual stocks, all-time lows for the long side. So NASDAQ, starting to look ugly. Rusty, same as it ever was, okay? Bow tie moving averages, downtrend proper order, well below the 50, Landry light below the 50, down here at multi-month lows. Just not looking so hot. Some of these stronger areas like Jets are now beginning to roll over. Look at your bow tie there, okay? That's kind of textbook in nature bow tie. Why don't you screenshot that? All-time high, okay? Moving averages roll over, and they cross from uptrend proper order, downtrend proper order fairly quickly, although we did have an early crossing back here. I'm not sure how that affects it, but I'm looking at the right here. You want to see that nice tight bow tie. It looks like a bow tie, right? So that looks kind of interesting. Kind of reminds me of CCL a little bit. She had a rally up yesterday, which completes the pattern, and then today it's going to sell off a little bit. A lot of these areas, a bit of a bummer. They broke out to all-time highs and it came right back down below their breakout levels. That's gaming. Cybersecurity would be another one. It looks okay longer term, but you can see shorter term, it's a little questionable because we did pull back below that breakout levels, those breakout levels. If you have any individual stocks you want to talk about, feel free to bring them up now. Internet, you can see it overshot the prior highs, which is great. Made a new high. As I've said quite a bit, with double tops, they rarely work out in the textbook kind of manner. Sometimes you overshoot or you undershoot, okay? When you overshoot, everybody feels like it's the all clear, like, okay, we're up here, we're Bitcoin, we're up here at brand new highs, and we took at those old highs, so everything's cool. We don't have anything to worry about, right? But unfortunately, when it comes right back in, all the Johnny-come-latelys that bought late begin to get in trouble, begin looking to bail out. And then the further you drop below these tops, the worse it gets, obviously. So that's looking kind of ugly. Gold, the commodity, so far just pulling back. That's looking pretty good. One of the better looking markets out there. Gold stocks looking okay. Spoiler alert, one of those mystery charts was a gold stock. Broker dealer in those areas that took out the prior highs, but then came right back in. Software is one that stalled short of its prior highs. Remember earlier I said stalling short or overshooting. So software is looking kind of ugly. Medical devices kind of hanging in there. That looks okay at the moment. Did we talk about the Rusty? Rusty still remains ugly. Yeah, we talked about that. Take a look at defense, kind of bumping up against its old highs. Wide and loose and sideways at best. Does look like it's still toppy. Jets, I think we talked about already, have rolled over. They're looking kind of ugly. When you look at the mags is now, I hate to hope, right? But I was hoping that it rarely does this work out, but sometimes, let me just rewind a bit. Usually, your prior leaders become laggards, okay? And the story I like to tell there is, I think it was 2008. I was in Italy, and I was at this award, the Morningstar Award show, and all the fund managers that were winning awards for this ridiculous performance were energy people, okay? Just ridiculous performance. They get up and they give their speeches and all. And I think it was John Bollinger was sitting next to me. I was like, I doubt you'll see any one of these people here next year because oil was running to $200 a barrel, whatever it was at the time. And the next year, of course, gold imploded. So not to be schadenfreude, believe me, I'm not, because I've got my ass handed to me quite a bit lately, and I know what it feels like. But good for these guys getting an award, but they probably won't get another award for a while, unfortunately. But I was hoping, long story endless, I was hoping that these old leaders would also stay or become the new leaders. And unfortunately, we're rolling back over with the mag, so that is of concern. Some areas like foods bottoming out, drugs too. It's these areas seem a little bit more defensive in nature, which is a little bit of a bummer. So we'll have to see how that shakes out. Here's your major drugs. Major drugs are looking okay. I prefer a bottom off of major lows as opposed to at mid levels like this. But it is what it is, and they are improving, and they have bow tied recently, and they have headed higher for the bow tie. Cloud computing, another one of those areas. Now, this is kind of the textbook double top. I almost said TKO because they have a pattern called textbook TKO, but this is a classic double top. Evans and McGee, Schabacher, all those guys. But you can see double top. We're going to have a bow tie here soon. I don't necessarily trade off a big picture technical analysis, but I do like it as a backdrop, okay? So cloud computing looks like it's in a lot of trouble because it's a double top and it's going to be a bow tie to the downside. It's already a first thrust to the downside. First thrust is just a big thrust lower, followed by a little bit of a pullback. Semiconductors, I like the semis to confirm what's happening in the indexes. or indices when the indices are headed higher, okay? Like, so if the indices are at all-time highs, I really like the semiconductors to be in a trend and at all-time highs too. I think it's very important. I haven't done any research here other than empirical, but I can tell you from empirical research, the market does a lot better when the semiconductors are doing well too. And there's probably something you could research there. Maybe do SPY :SMH on stock charts and see what that chart looks like. See if there's anything to glean from that. Okay, that gives you a ratio chart. Anyway, semiconductors, we had this, I guess that was the deep seek gap, which I thought was total BS, but it is what it is, right? It was enough to shock the markets. And it's not the news, it's the reaction to the news. The news was bogus, I think, okay? But the reaction to it was not. However, we did close the gap. So I'm like, you see, I knew it was bogus, but then we roll back over, which is not a good thing. So a lot of weeping and gnashing of the teeth in the semiconductors. And what I was hoping for, I know, hoping one hand and see which one, never mind. Did I demonetize yet? Anyway, I was hoping this gap would get filled and keep on keeping on. And my thinking is when you have overhead supply and you drop below it, if you can get right back through it, nobody has time to react. It's sort of like my short patterns, okay, on the short side. Let's go back to CCL for a minute. The reason I don't wait for a big, deep pullback, although you probably will get faked out a lot more by not doing that. The reason you don't wait for a big, deep pullback, something I like on the long side, is that you want to get in as early as possible and make sure the most amount of people are caught off guard. What's the most pain? Okay, so take a look at a pattern and like, okay, where's the pain index of the pattern? I'm just kind of backing into something here, but the pain index would be anybody who bought it up at these levels, and if it begins to break down, they're all of a sudden going to be a hurt and pup. Okay, so again, breakdowns from high levels or of major concerns. Social media, one of the few areas doing okay. I'd have to dig. This is kind of a thin ETF. I don't know if it's worth tracking, but maybe there's something in here, Meta, something that might be doing well. Let's take a look at that. Yeah, so Meta looks okay. I'm not super excited about it, but it's in a trend. It's pulled back. That's probably what's floating the social media ETF. Telecom, none of those areas that overshot the prior highs, but unfortunately stalled out a bit. Longer term still looks okay, but stalling out nonetheless. And then, as mentioned ad nauseum, we have a few areas like home builders who have rolled over a long time ago and remain in downtrends. Okay. That's it for stocks. Any questions on anything? Any thoughts? All right. Any individual stocks you guys want to look at? Since I started the Facebook group, that seems to have dried up a lot. But anybody who's not in a group, any questions? All right. Well, obviously, I want to thank all you guys and girls for attending. To those of you who are not in Facebook, I'll hopefully see you next Thursday. Everybody have a great weekend, and may the trend be with you. Thank you so much. You're welcome.